Hello and welcome to yet another special CNBC TV 18 Investor Camp, this time from the Punjabi city of Amritsar. It's nice and crisp out here and the market's got a bit of a chill over the last few days as well. You can understand a bit of turbulence though. It's the last lap of the run-up to the union budget. The Delhi elections are also happening and we've had some very pedestrian earnings as well over the last few sessions. So you can understand a bit of turbulence, but the important thing is that banks have started correcting and banks have been the leaders of this rally, and that is bound to be a talking point at this investor camp.
We travel the length and breadth of this country to meet with all of you investors because the energy and the enthusiasm in the Indian markets has of course risen tremendously in the last 1 year. And here we are today in the beautiful city of Amritsar with a whole host of experts to tell you what you should be doing. Udayan, hi, good morning. It's been slightly troubled times. I mean, the last 6 trading sessions have seen the markets move on the lower side and there's some trepidation with respect to earnings, the Delhi election outcome, etc. But what should the approach be from now until the big event, which is the budget in a fortnight?
First is, I think people should not panic. Look at the corrections over the last 1.5 years. I don't think there's been any correction of more than 5-7%. And every time the market falls 5-7%, I sense there's a lot of more people are actually happy with the fall than they're unhappy, which is the classic case when people are underinvested. It's not to say that in the last 6-7 months, domestic investors have not started participating. But I still think the level of exposure is much, much lower than we saw at the peak of the last bull market in 2007. We are nowhere close to that. And therefore, every time there's a correction, you find a lot of people feeling quite happy that the markets are falling. Some are happy because they will probably get an entry opportunity. But, people end up waiting too long. I mean, at least in the last 3 corrections, my sense has been the Nifty's fallen 300-400 points. People are waiting for 900-1,000 points on the Nifty to start to enter. Usually, markets which are in the midst of such strong trends do not give you corrections that deep. And if the correction turns out to be that deep, believe me, nobody will have the courage to buy. If the Nifty were to go back to 8,000, they'll say it's the end of this bull run. We did not get sucked in. We are very happy. And we will not go out and buy right now. So we are still in that phase in the market where people are underinvested. They're looking for opportunities to enter, but they can't bring themselves to buy the corrections. So to answer your question, I have no clue whether this market stops falling at 8,600 or goes lower. It won't surprise me if it went a bit lower because of the way earnings have turned up and because of the reasons that you mentioned. But none of us will be ever be able to catch the bottom of a correction in the market. So I think the sensible thing to do, and that's worked as a trade too over the last many months and quarters, is that you start buying when you get a 300-400 point fall on the Nifty. If it falls 200 points more, you buy some more. But if you wait and want to catch the bottom of the correction, then it's very, very difficult. So I think in the last few days what's happened is that some of the hot clusters of the market have corrected, which is your banks. Some of the infra stocks have corrected quite a bit. The hot autos have come off. The really outperforming stocks like Tata Motors have given you interesting corrections. You start buying those stocks. If SBI and ICICI Bank and all these stocks fall some more over the next few days, which is not unlikely, you buy some more. But at least start buying the leader sectors which have corrected in the last 10 days, because the leader sectors will lead the market once again. Make no mistake about that.
We did get a reality check in earnings. As you mentioned, the PSU banks like PNB, etc., delivered quite weak numbers. And earnings is generally the basis of every rally in the market. So would that make you cautious that earnings have not picked up just yet? And would you stay away from these spaces or still continue to buy?
The answer is probably different for a smart tactical trader and an investor. For professional traders, they will rotate sectors. And maybe even before the earnings came in, some of the tactical traders might have started cutting down on banks because banks was a crowded trade. I have no doubt in my mind that if this bull market were to continue for the next few quarters and years, then it will not happen without the participation and leadership of banks. I cannot believe that IT and pharma will lead a bull market in India over the next 2 or 3 years. It will have to be the domestic sectors. So I think the smart money has churned out a little bit or gone a little underweight in banks right now. Some of the tactical traders might even be short at this point in some of the public sector names. So there could be a deeper correction in some of these names. But for an investor, I think this is the opportunity. Let's start off proceedings with our first speaker, Atul Suri of Rare Enterprises.
Markets are made out of two extreme emotions, greed or fear. ਜਦੋਂ ਤੁਸੀਂ ਸਭ ਤੋਂ ਜ਼ਿਆਦਾ ਲਾਲਚ ਕੀਤਾ ਨੁਕਸਾਨ ਹੋਇਆ ਔਰ ਜਦੋਂ ਤੁਸੀਂ ਸਭ ਤੋਂ ਜ਼ਿਆਦਾ ਡਰੇ ਸਭ ਤੋਂ ਜ਼ਿਆਦਾ ਲੋਕਾਂ ਦਾ ਫਾਇਦਾ ਹੋ ਗਿਆ ਤਾਂ ਮੈਂ ਤੁਹਾਨੂੰ ਦੱਸਣ ਵਾਲਾ ਹਾਂ ਕਿ ਕਿਸ ਤਰ੍ਹਾਂ ਅਸੀਂ ਇੱਕ ਇਮੋਸ਼ਨਲ ਜਰਨੀ ਵਿੱਚ ਜਾਂਦੇ ਆ ਭਾਵੇਂ ਤੁਸੀਂ ਫੰਡਾਮੈਂਟਲ ਯੂਜ਼ ਕਰੋ ਭਾਵੇਂ ਟੈਕਨੀਕਲ ਯੂਜ਼ ਕਰੋ ਭਾਵੇਂ ਇਨਫੋਰਮੇਸ਼ਨ ਕਰੋ ਭਾਵੇਂ ਟੀਵੀ ਦਾ ਬੰਦੇ ਕੋਲੋਂ ਫੋਲੋ ਕਰੋ ਭਾਵੇਂ ਬ੍ਰੋਕਰ ਨੂੰ ਫੋਲੋ ਕਰੋ ਭਾਵੇਂ ਦੋਸਤ ਨੂੰ ਫੋਲੋ ਕਰੋ ਗਰੀਡ ਔਰ ਫੀਅਰ ਹਰ ਇਨਸਾਨ ਵਿੱਚ ਹੈ ਔਰ ਤੁਸੀਂ ਇਸ ਚੱਕਰਵਿਊਹ ਚੋਂ ਤਦੋਂ ਹੀ ਨਿਕਲੋਗੇ ਜਦੋਂ ਤੁਸੀਂ ਇਹ ਗਰੀਡ ਔਰ ਫੀਅਰ ਨੂੰ ਸਮਝੋਗੇ
What I'm going to share with investors, because they're essentially of a retail nature here, is really about riding the bull. I mean, there is no getting away that markets at lifetime highs touched almost 9,000. And that's a kind of a big bull market. And this bull market has been going on since 6 years or more, since the 2008 bottoms when Nifty was 2,500 to 9,000. However, this bull market is happening globally. And the line I read internationally is that this is the most hated bull market. Not that anyone's grudging a bull market. It's just that investors have not been able to make money. So when you lose out an opportunity, you kind of start hating it. So we term this as the most hated bull market. The title of my presentation is Riding the Bull. Essentially, that just having a bull market is not good enough. It's important that as an investor or a trader, you're able to ride it. So what I'm really going to share with people is the emotional cycles in this market. You know, whether you use fundamentals or technicals or information or however sophisticated you are at the end of the day a human being. And emotions are the biggest single deciding factor. So when we get optimistic on the market, when we get all things are good, we put in some money, and as the market rewards us, you get more optimistic and we put larger amounts. And as the market goes ahead, and we start making more money, we really get into this whole stage of all in, and beyond that, we get into a stage of leverage. And that's a euphoric stage. And at that point, we really think we are very bright and the market's going everywhere, everyone's making money, there's excellent this thing, and people overdo it. And this is the extreme point of greed. What causes bear markets is not just the fundamentals or technicals, it is the human behavior. When all people get greedy and there is excessive leverage in the system, that itself causes stop. And this euphoria ultimately leads to corrections.
ਸਭ ਆਣਗੇ ਤੁਸੀਂ ਸਭ ਆਓਗੇ ਜੋ ਹਾਲੀ ਵੀ ਕੈਸ਼ ਵਿੱਚ ਬੈਠੇ ਨੇ ਤੁਸੀਂ ਆਲ ਇਨ ਨਹੀਂ ਆਓਗੇ ਤੁਸੀਂ ਲੀਵਰੇਜ ਵੀ ਕਰੋਗੇ ਇਹ ਮਾਰਕੀਟ ਦਾ ਦਸਤੂਰ ਹੈ ਮਾਰਕੀਟ ਜਦੋਂ ਤੱਕ ਨਹੀਂ ਗਿਰੇਗੀ ਜਦੋਂ ਤੱਕ ਸਾਰੇ ਬੰਦੇ ਅੰਦਰ ਘੇਰ ਵਿੱਚ ਨਹੀਂ ਆਣਗੇ ਔਰ ਮਾਰਕੀਟ ਤਦੋਂ ਤੱਕ ਨਹੀਂ ਉੱਠੇਗੀ ਜਦੋਂ ਤੱਕ ਸਾਰੇ ਬੰਦਿਆਂ ਨੇ ਆਪਣਾ ਮਾਲ ਨਹੀਂ ਵੇਚਿਆ ਮਿਸਟਰ ਮਾਰਕੀਟ ਨਾ ਬੜੀ ਵੱਡੀ ਬੜੀ ਉੱਚੀ ਚੀਜ਼ ਹੈ ਔਰ ਇਹ ਹੀ ਮਾਰਕੀਟ ਤੁਸੀਂ ਦੇਖੋਗੇ ਇੰਨੀ ਐਕਸਾਈਟਮੈਂਟ ਹੋ ਰਹੀ ਹੈ ਅੱਜ ਕੱਲ एक्साइटमेंट होर अगे बढ़ेगी और जिन्ने भी नहीं लिता कहीं लेफ्ट आउट फीलिंग आएगी म्यूचुअल फंड विच पैसा आएगा SIP पैसा आएगा सब कुछ आएगा और लोग अंदर आएंगे सो इट इज इंपॉर्टेंट कि तुसी आइडेंटिफाई करो अपने मार्केट किस स्टेज विच है और यू ट्राई टू टेक द बेनिफिट भावें तुसी फंडामेंटल यूज करो भावें टेक्निकल यूज करो भावें तुसी इंफॉर्मेशन करो बट नेट जरूरी है कि तुसी बेसिक समझ रखो कॉमन सेंस दी कि भाई ऊपर विच यूफोरिया हो रहा है कि थल्ले विच हो रहा है थ्रिल हाली बाकी है यूफोरिया हाली आना है ऐ मेरी थॉट है दिस अ पर्सनल ओपिनियन
My analysis of this current bull run is that we are still not at the euphoric stage, because when I speak to people I find that yes, people are getting in but they are cautious, they are not all in, and there is very little leverage in the system. I feel that only when that happens do you have the basis or the genesis of starting of a bear market. So I think there is time for that. So I'm urging people to get in, but remember the basic 3 or 4, 5 observations of euphoria. They don't really come with P's or they don't come with technical breakouts. They come with psychology. They come with greed, and that's in all of us. Collectively, we make the market.
Exit ਕਰਨ ਦੇ ਬਗੈਰ ਕਰਨ ਦੇ exit ਤੁਸੀਂ ਇਸ ਮਾਰਕੀਟ ਵਿੱਚ ਕਦੀ ਪੈਸੇ ਨਹੀਂ ਬਣਾ ਸਕਦੇ So the way to ride a bull is to know when to exit. ਕੀ ਲੈਣਾ ਤੇ ਸਭ ਨੂੰ ਪਤਾ ਹੈ ਟੀਵੀ ਦੇਖੋ ਦੋਸਤਾਂ ਨਾਲ ਗੱਲਾਂ ਕਰੋ ਲੈ ਸ਼ੇਅਰ ਲੈਣ ਵਿੱਚ ਕਿੰਨਾ ਮੁਸ਼ਕਲ ਹੈ ਕੋਈ ਮੁਸ਼ਕਲ ਨਹੀਂ ਹੈ ਐਗਜ਼ਿਟ ਕਰਨਾ ਬੜਾ ਮੁਸ਼ਕਲ ਹੈ ਜਿਸ ਤਰ੍ਹਾਂ ਮੈਂ ਤੁਹਾਨੂੰ ਦਿਖਾਣਾ ਕਿ ਮੇਰੇ ਵਾਸਤੇ ਐਸੀ ਬਲੂ ਲਾਈਨ ਹੈ ਨਾ ਦਿਸ ਇਜ਼ ਦ 200 ਡੇ ਮੂਵਿੰਗ ਐਵਰੇਜ ਇਟਸ ਅ ਵੈਰੀ ਸਿੰਪਲ ਟੈਕਨੀਕਲ ਥਿੰਗ ਕਿ ਭਾਈ ਮੈਂ 550 ਚ ਐਗਜ਼ਿਟ ਨਹੀਂ ਕੀਤਾ ਮੈਂ 300 ਚ ਕੀਤਾ 250 ਵਿੱਚ ਕੀਤਾ ਫੇਰ ਵੀ ਬਚਤੇ ਗਏ ਨਾ Vida paate nahi aaya. So, I want to summarize by saying that the only way to ride a bull market is to know when to exit. If you do not know to exit in any investment in any asset class, you will always lose money. Know when to exit. If that happens, you will be able to ride the bull and make lots of money, and I think there's a lot of money still to be made.
Let's take a break at this point. When we come back, we've got Sabyasachi Mukherjee of IIFL waiting to talk to you. We'll be back in a minute.